Hi everyone, Jeff Appleby here with Oakland Realty. It is March 2023. We've got your latest stats, and I'm going to tell you about the drivers and what is really changing and driving the market here. So, sales activity has been depressed ever since interest rates started coming up last year. So sales were 33% below the 10-year average. So it was definitely on the lower side of sales for the month of February. But what is even more notable is that we have basically the second lowest inventory in over 18 years for the month of February. And even wilder than that, we have the lowest number of new listings on the market in over 20 years. So this has really been what's defining the market. So if I put that another way, buyer demand is pretty low, but buyer inventory is super low. We have a lot of buyers fighting over, to put it another way, what few buyers are out there are fighting over what few listings are out there. So, this has really been what has been causing those multiple offer situations, the buzz in the market, and it is really not what we expected to have happening in this environment. I thought there would be a lot more listings coming on the market. I also didn't think buyer demand was going to be this elevated. I thought it would be a little bit lower. So, goes to show it's really difficult to predict exactly what's going to happen, even though we have a good direction where things are going. Yeah, this is really, February is usually a healthy month for inventory. It's the start of the spring run. We usually get the most new inventory in March and April. That has just not really happened this year. So what does this all mean? Around Vancouver and the North Shore, we've seen the HPI average and median sale prices bump up in pretty much all property types. And we've also seen prices kind of tick up and sales to active ratios are following along. They've all bumped up. In some areas, it's a bit more extreme. Like detached in North Vancouver has gone from 12 out of 100 homes selling in a month to 32 out of 100 homes selling in a month. So that's basically gone from a buyer's market to a seller's market, skipping the whole balance market. So it really just has changed quite a bit and a little bit differently than a lot of us expected. So here is the flip side of all that. So, the speed has been picking up, prices have been picking up, but part of that was driven by the 3 to 5 year mortgage rates that the bank dropped to their buyers, to their clients in December and January. Those have since gone back up, and it now looks more and more likely that the Bank of Canada is not going to change or drop their rates through the rest of the year. And it was expected a couple months ago that rates might drop towards the end of the summer, early fall. Now it looks like they'll go right through the year without a drop, just because of where the Fed is in the States and inflation numbers. So the question really is at this point, will buyer demand remain at these levels where it's at, or will it go down with the bank rates where they are? And will inventory climb? So usually when we have low buyer demand and interest rates going up, inventory really climbs. It hasn't happened this year. So what is going to change? What is going to break? We'll keep you updated. But for the time being, if you have any questions or you want to take advantage of these market dynamics, get in touch.